Hello and welcome. In this video, we will learn what circuit breakers are in the world of stock market. Alright? Now, to begin with, we will see what circuit breakers really are. Circuit breakers are electrical items which prevent the damage of a circuit by stopping or breaking the circuit. Okay? They prevent the damage that can happen to a circuit by breaking the circuit. Now, this damage can happen due to short circuit or overloading. Alright? So, the circuit breaker protects the system. Now, the circuit breaker that we are learning about in this video is the one that is used in stock market. Now, the stock market circuit breakers are used to prevent damages that can happen to an investor due to too much volatility. Okay? Now, what is volatility? Price movement in both directions or in a single direction. Okay, so you know that stock prices move up and down, correct? But moving too much in a single direction or moving too much in both the directions in a short duration of time, then it is called as volatility. Alright, now if the price of a stock moves too much in any direction, either in up direction or down direction, in a short duration of time, then an investor will lose his money. So, to prevent this, we have circuit breakers in the stock market. Okay. Now, these circuit breakers are used to control excess volatility in the market. Okay. Now, why does this happen? Why does the price movement, too much of a price movement in any one direction happen? Now, this happens due to too much optimism or too much pessimism. Okay. So, the circuit breaker controls too much optimism and too much pessimism by halting the trade for a specified amount of time. Okay. If there is too much optimism or too much pessimism, then the investors can lose money. Alright. So if everyone starts buying only or if everyone starts selling only, then the price of the stock will start moving only up or only down, which will damage the investor's portfolio. So to prevent that, the circuit breaker is used. Okay, circuit breaker was introduced in June 2001. Alright, now let me go to my desktop and take you to the NSE website to show you the details of circuit breaker. Alright, so I am in Google and here I have typed NSE circuit breaker. I'll go to this first result, which is by nseindia.com. And here you can see the details of circuit breaking system. Okay, so we have trigger limit here and trigger time along with market halt duration and pre-open call option session post market halt. Okay, so let me take this and explain you how it works. All right. So let us say that yesterday was August 1st. Okay, yesterday was August 1st and Nifty closed at 20,000. Alright, the closing price of Nifty was 20,000 yesterday. Now, these trigger limits are set by SEBI and the exchanges have to calculate the circuit breaker limits on day-to-day basis based on previous day's closing price. Okay, So I told you that yesterday was August 1st and Nifty closed at 20,000. Now, today is August 2nd and the exchanges have to calculate the circuit breaker limits for today based on yesterday's closing price. So yesterday's closing price was 20,000. Alright. Now, the market opens at 9:15 for retail traders. Alright. Let us say that there is a very good news. There is a very good news. And due to that good news, let us say that at 9:30 a.m., the Nifty index hit the upper circuit. Now what is this upper circuit? It is previous day's close plus 10%. 10% is the trigger limit. Okay, 20,000 plus 2,000, 22,000. If Nifty hits 22,000 before 1 p.m., that is our first condition here, before 1 p.m., then the market will halt for 45 minutes, meaning no trade will happen in Indian stock market. Okay, so the market will halt for 45 minutes, meaning trading stops till 10:15 a.m. So if the upper circuit hits at 9:30, then from 9:30 till 10:15 a.m. for 45 minutes trading stops. Then from 10:15 a.m. till 10:30 a.m. there will be a pre-open call auction. Meaning, see, at 9:15 a.m. the market opens for retail traders, but the market will be open before 9:15 too, and we call it as pre-market session. So the same thing will happen. From 10:15 to 10:30. All right. So the exchanges will take orders. Let us not go in too deep about this. Okay. But there will be pre-open call auction session from 10:15 to 10:30, and after that the market reopens for trading at 10:30 a.m. All right. So this is if Nifty hits the upper circuit before 1 p.m. First condition, before 1 p.m. Okay. Now this is for good news. The same thing in opposite direction is for bad news, okay, or downside. All right. So let us say that on August 2nd at 9:30 a.m. Nifty hits the lower circuit. Okay, 20,000 minus 2,000, which is 18,000. What is 2,000? 2,000 is the 10% of previous closing price, which is 20,000. So there is a bad news due to which people are selling, and so Nifty hits the lower circuit. And since this has happened before 1 p.m., so this condition applies. Trading stops till 10:15 a.m. for 45 minutes, and then from 10:15 to 10:30 there is a pre-open call auction, and then market reopens at 10:30 a.m. Okay. So when we say 10% trigger limit here, it is for both upside and downside. All right. I hope it is clear. Now this condition is done. Let us take the second condition. There is a good news which has come late, and let us say at 1:30 p.m. on August 2nd, Nifty hits the upper circuit. Okay, 22. So this condition applies now from 1 p.m. to 2:30 p.m. If that happens, then trading stops till 1:45 p.m. So from 1:30 till 1:45 p.m. for 15 minutes trading halts, and from 1:45 to 2 p.m. there is a pre-open call auction for 15 minutes, and the market reopens at 2 p.m. Okay. Now this goes for the other side too. If there is a bad news, okay, I'm not going to explain it once again. Now let us say that there is a good news after 2:30 p.m. So we are going for this condition. Okay. So the market hits the upper circuit at or after 2:30 p.m. If that happens, then there is no halt. And no pre-open call option. Okay. So the market will not stop if the Nifty or indices hit the upper circuit or lower circuit after 2:30 p.m. So what happens is, if Nifty hits or if the indices hit upper circuit or lower circuit after 2:30 p.m., they wait for the next trigger limit, which is 15%, to happen. Okay. If that doesn't happen, then there will be no halt. Alright. So that is first condition for trigger limit of 10%. Next, let us take for 15%. Let us say that there is a good news, and due to which at 9:30 a.m. the Nifty hits the first trigger limit, which is 10%. Alright. Since this is before 1 p.m., trading stops till 10:15 a.m. and there will be a pre-open call option, and then market reopens at 10:30 a.m. This is what we had seen in the previous slide. Okay. Now, after the market reopens at 10:30 a.m., if once again Nifty hits upper circuit or lower circuit of 15%, meaning Nifty goes to 23,000. If Nifty goes to 23,000 on the upper side or 17,000 on the lower side before 1 p.m., then this condition or these rules apply. Okay. The market stops, trading stops or halts till 12:30 p.m. Alright. So for 1 hour 45 minutes the market halts, and after that there will be 15 minutes of pre-open call option, and market reopens at 12:45 p.m. Alright. So the same calculation goes for downside too. Alright. And I think you can figure out the other conditions. Alright. I am not going to explain and bore you. But all these factors depends on when the indices hit the upper circuit or lower circuit. Alright. Next, if any time during the market hours the indices hit 20% trigger limit, then for the remainder of the day the market halts. There will be no trade in the market. Okay. It goes for 15% too, which if it happens on or after 2 p.m. Then for remainder of the day no trading happens in the stock market. Alright. Yes. Now this was for indices. Okay, this was for indices. We have price bands for stocks too. Alright, we have upper and lower circuits for stocks too. So let me go to my Zerodha dashboard and show you the upper and lower circuits of stocks. Alright. Alright. So I am in my Zerodha dashboard. So let me add Canara Bank. Okay. And let me add Infosys. Alright. So here if you click on market depth, this symbol, it tells you what the lower circuit is. See this here, 295.45, and this is the upper circuit, 361.05. Now if you look at the today's closing, it is 328.25. Now this will be taken into consideration to calculate upper and lower circuits for tomorrow. Okay. Now this has been calculated, lower circuit and upper circuit values have been calculated for today based on previous close. So previous close means yesterday's close. Yesterday's close was 329.85, and based on this the 10% upper and lower circuits are this and this. Alright, yes, so let me minimize this and let me show it for Infosys. So Infosys today's closing price is 1388.80 rupees. So if I click on market depth, you can see the lower circuit is 1249.95 and upper circuit is 1527.65. Okay, this was for today, and this was calculated based on previous close, which is 1411.55. All right. So if at all price reaches upper or lower circuit, then the trading stops for that particular stock. But then for stocks, the rules are little bit different. So let me go to this and let me click on price bands. Okay, price bands. So stocks have 2%, 5%, 10% and 20% trigger limits. Okay. Now big companies have 20% and small companies have 10, 5, 2%. Alright. Now this is the limit, and there is no circuits for stocks which have derivatives, meaning futures and options. If a stock has future or option, then it will not have any upper or lower circuit. But then there is a star here which says this: there is a fixed operating range of 10%. Alright. Now generally the indices or stocks hit the circuit when there is very good news or very bad news. Okay. Two of the elections had negative effect, or I can say one negative and one positive effect. Then recently Hindenburg report had come on Adani, so which made the Adani stocks hit lower circuits repeatedly for multiple days. Then the COVID made the indices hit lower circuit. So these situations, which are extremely rare and are also extremely bad, make the indices or stocks hit upper or lower circuits. So the chances of indices or stocks hitting lower circuits are more than the upper circuits being hit. Okay, because good news rarely comes, whereas bad news comes oftenly. Okay, often. So that is about the circuit breakers. For stocks it is different. We have 2, 5, 10, and for indices it is different. And one more thing that I forgot to tell: there is no upper or lower circuit for stocks on the listing day. Okay, after an IPO has happened and on the day of listing on stock exchanges, there is no circuit limits. So stock can go down as much as it wants or go up as much as it wants. Okay. From the next day after the listing, the price bands or the circuit breakers or limits apply. Apart from that, rest of the things are same. Okay. The scripts which have no derivative products which are available on the stock market have these price bands, okay, or circuit limits. All right. Yeah. So that was what I wanted to tell. I hope it is clear. So that's it for this video. I'll see you in the next video. Till then, take care and thank you for watching.